Hello and welcome to this week's episode of The Capitalist Investor. As always, you have the dream team here. Tony the Tiger, Cool Hand Luke, and myself, Derek Gabrielson. How we doing, guys?
Between cutting grass and like being stupid, maybe I will be cool. Like I should be Cool Hand Luke. Like I've almost cut off my hand, I think, multiple times with the tractor. You know, I remember getting off one time and the blades were still turning, and I like put my hand dumbly in there. And you never know in today's world.
All right, man. Here's some words of wisdom. Stay in your lane. and what I mean by that, I've always said it. You know, if the electrical box burns out or something in my house, like, guess what I'm not going to do? I'm not going to go down there and try and figure it out. If something starts springing a leak in my basement, I'm going to go shut off the valve and I'm going to call a plumber. I'm not going to grab a wrench and try and fix it my own.
I've got a house to sell, Tony. I'm trying to keep it cheap.
Hey, man.
If anyone listening to this podcast wants to buy a house in
is,
Westlake, Ohio.
There's another thing,
nice
man.
ranch.
I am not cutting my own grass because, based on my work, my professional workload and my personal, it's worth $40 to me a week to pay somebody else.
Yep.
And I'm not going to cut my hand off. Right?
Irreversible.
That's an irreversible financial mistake. Exactly. Good point.
I'm learning a lot from you, Tony.
All right.
Speaking about irreversible financial mistakes, let's talk about the Biden tax plan.
I like that transition. I like that. Ayo, taxes.
Well, apparently they're not going to be any private markets anymore. There's not going to be any investing anymore because one of the biggest things he wants to do is raise cap gains to like 50% for the top bracket. So there's no point in you investing or trying anymore, guys.
Yeah.
Let's just give up our jobs.
All right, so let's start from the top here. So, he wants so one of the ideas is to raise the top federal ordinary income from 37 to 39.6. It's very similar to like what Obama's was.
Yep.
And that's for people making over $400,000. Now, I think how Biden would pitch this and how I think he's like, these are taxes for the rich. They need to pay their equal share.
$400,000 isn't rich. I hate to break it to him in a lot of areas.
It's like, I mean, what is it? What's the statistic? Like, you need at least making $100,000 to like be just to pay, afford
120 to afford a
like
a
normal
house
things
now?
And what we figured, like house, shelter, car, gas, food. Like $100,000 is kind of like what you need to actually just not be sweating every day, right? So yeah, $400,000 really isn't. I mean, it isn't.
It's very middle class.
So there's that. Then he wants to jack up the cap rate, the capital gains rate. So that's capital gains on like your house. If your house appreciates, if you have a non-qualified account, you've maxed out your traditional, saving buckets like IRAs, 401ks, things like that. The money that's saved in non-qualified assets. Right now, possibility of paying 0, 15, or 20%. What President Biden wants to do is raise anyone making over $1 million. He wants to take that 20 to 40, essentially. And then you strap on like Affordable Care Act and stuff. It could be close to 50, which is bananas.
Yep.
He wants to increase Medicare tax through payroll, right? From 3.8 to 5% for people making over $400,000. So he's got a target out there, right? And it's upper middle class and above. And he wants to repeal 1031 exchange. What is that? That's essentially long-term cap gains inside of real estate. There's ways to transfer that to new properties. Probably a whole different show for somebody in that expertise, but that's essentially what it is. It's transferring not, large cap gains in real estate from one purchase to another. Carried interest. Hang on, sorry. He wants to repair that. There's special funds out there that have cap gains in certain investment interest, like interest that it's paying. You should be paying ordinary income tax on interest. And there's some investments out there where you pay cap gains. He wants to eliminate that. Then he wants to have the billionaire tax. So it's basically, you can think of it, is it a wealth tax? Because it's definitely not adding to a traditional tax bracket, but essentially making sure if you are a billionaire that you're paying at least 25% tax. But if you really read it, it could be affecting anyone that has a net worth of over $100 million. That is not a billionaire. That's far from it. It's 90% less. So if you have a $100 million net worth, now you're paying a flat 25. Now, that is where we have this complicated tax laws. It's thousands and tens of thousands of sheets of paper to do all this. That's why CPAs make a ton of money, because when you have a lot of money, you can do a lot of things. And when you can do a lot of things, you can complicate it very quickly. And that's why a billionaire might only pay 10%, because he's taking advantage of the current tax laws. Blowing that up could just be an economic disaster.
Let me throw some history onions.
Can't wait.
1860s, income tax comes out for the first time to pay for repercussions of the Civil War. Comes out at a rate of 1%, 2% at the high rate. All right, now we're talking about 40% upwards of the high rate. Corporate taxes, I believe it was the early 1900s. It was like 1908 or 1909. Corporate taxes came out for the first time. I think it was actually 1913. Came out for the first time at a rate of 1%. Now we're talking about corporate taxes. Did you mention that? Corporate taxes rising from 21 to 28%.
Yep.
So now we're talking about 28% on corporations. And I don't think Biden realizes that small business owners pay corporate taxes that are structured as any LLC or S Corp, C Corp, whatever it be. And many small business owners make 100, 200, 300 grand a year. Now they're hurting. So it's not going after just 400 grand or above. Also, if you go back to just 4 years ago, he was talking about the $400,000 limit 4 years ago when he came into office. All right. $300,000 4 years ago is probably $400,000 of income today, adjusted for inflation. So that number hasn't changed, but many more Americans are now making close to that number that were probably making $300,000 household combined. And that's just two jobs making 150 grand a year. And like in Ohio, that's good income. But you look at New York, you look at California, you look at maybe the Texas, Floridas of the world that are a little higher cost of living areas. 300-400 grand does not go very far. Again, it's very middle class, but it's very interesting.
I think in Cleveland, Ohio, it's a lot of money.
It's a lot of money in Cleveland. Yeah.
You go to California, that is not a lot of money.
No, you got to make that to afford the basic necessities. When you're buying $1.5 million house, that's the very average home. But it's interesting historically how much taxes have risen and how okay we have been with it, because we have lived only through it. Like, we've only lived through this time. We're used to it. But you go back hundreds and hundreds of years, the people back then would have been so frustrated and so disappointed with where America is headed in today's world. And it's very interesting. Ray Dalio, his newest book I love, Principles of Changing World Order. Most people can't identify big changes in their lives because everything goes in cycles, usually about 70 or 80 years. Good times last about 70 or 80 years. Bad times last about 70 or 80 years. So the big transitions in someone's life only happen once in their lifetime in regards to big tax changes. Like, I'm talking major tax changes or major changes in the monetary system around the world. It's interesting how okay we're with it. And we're talking about, these high percentages, whether it's changing 5 or 10%, they're all very high.
It's just wild to me, honestly, the the political debates, that go on out there. But I don't know how, based on our current system right now, that under any circumstances you could say, hey, it's a good idea to raise our taxes to give more money to the government. Like, how could you ever possibly think that was going to be a good idea? Because they're going to take that money and whatever project they're doing, they're going to waste it. It's not going to work.
Or just give it away to
when
other
has it ever
countries?
worked?
Right.
Exactly, or give it away for stuff that the majority of the people don't want to see.
Yeah, I saw somebody a meme on Facebook, and they're like, essentially, if you earn it, spend it, save it, invest it, build it, sell it, live in it, drive it, eat it, give it away, or die, you pay taxes on all of those. Every single thing. I just think about everything I just said. I did it very fast, but everything you do has a tax associated.
What we ran from, we fought a revolutionary war over a tea tax. I think it was a 1 or 2%
taxation.
tax.
Taxation without representation.
Yeah.
Was that how?
Essentially, yes. Yeah. But like, we are worse off than what we ran from Great Britain in the 1770s.
But yeah, if you live in California, if you live in like LA County, or you live in like Manhattan, and you're making more than $250,000 as an individual, you're probably giving half of your salary to taxes just on the income and property tax side.
Income, state tax, sales tax. Like, I mean, it's
city
gone.
tax, you got to, I think it costs like something ridiculous, like 8% or something to live in Manhattan, like an additional like local tax. But it's just like, it is wild.
And you know, like the rent's at least 2, if not 3x. I know somebody paying $10,000 for an apartment. Like, can you imagine the house you could have for a $10,000 mortgage payment?
So this is the thing.
And you're buying a 2-bedroom apartment.
In one of the topics we just talked about a couple episodes ago was distribution and accumulation phase. And this is why, if you don't come from money, if you're working your way up in the ranks, it is so hard to accumulate anything nowadays because taxes are one of the biggest hindrances to wealth creation and wealth accumulation.
100%.
So just think about this though. This is the wild part. So, at the end of 2025, January 1st of 26, we're going to have a new tax law. So whether Trump wins, he'll probably modify what he currently has in place. Is what I would guess. He'll make some changes, I'm sure. If Biden wins, he is going to try and do a lot of the things we just talked about. And there's a good chance that most of that will get shot down with the checks and balances. And what happens next is that when there's a stalemate, it reverts back to the Obama tax rules. And if that happens, it gets a lot more complicated again. Trump actually made things less complicated. He raised the standard deduction, so like virtually nobody can itemize anything. Well, that's cut in half. So now we come back to possible itemization. You're going to bring back SALT tax, so like state and local tax. You're going to be able to amortize your mortgage interest, and all this stuff is going to be coming back, which is, you talk about complications. Holy cow. And the brackets are going to change. The marginal brackets will change. The 10 will go to 12, and the 12 will go to 15, and the 22 will go back to 25. So essentially, what's going to happen is you're going to be paying 15 to 20% more in tax, on top of your deduction being cut in half, and the child tax credit that's going to get cut. Like every you're going to be paying more in taxes in about 1.5 years.
Especially retarees.
Yeah.
Especially retirees.
Well, because your marginal bracket's going to go up, and most of the
exactly.
money's in qualified assets like
whether
traditional
directly
IRAs and 401ks.
Whether directly or indirectly, higher tax rates only help the rich and keeps the poor, middle class poor.
Exactly.
It actually disincentivizes social mobility within the social economic status.
Yep.
Which is why everyone, even middle class America, feels poor right now.
Right. Yeah. So all right. What are some solutions rather than us just sitting here bitching about it? What can we offer? What can we offer as a solution?
The Biden administration has not called me.
The solution is
we
call up our representatives and start complaining, and we fight against this big government. But
how about some
actual actionable
action items that you can actually do regardless of who wins or loses?
So you want to use the tax code to your advantage. Anyone can try to get fancy, and that usually comes with having some assets in different areas, whether it's Roth, IRAs, traditional IRAs, or whether it's taxable. I know for us, we've been looking at things like opportunity zones for real estate. To utilize real estate for those tax deductions, you don't have to be a multimillionaire. Maybe minimums of $100,000 to pour into that for higher income earners, or for a big Roth conversion that you do, things like that to get around it, right? So opportunity zones, charitable contribution funds if you're over 70 years old, those kind of tax strategies are things we take a look at.
Yeah, I mean, all right. So if you're saving all in traditional, I mean, you could start mixing in some Roth contributions. That's one thing. Depending on where you are on an income level, you could or should be considering Roth conversions before taxes actually do go up. They are on a discount right now. So those are some things those are some real things you could or should be thinking about. D, can you think of any?
Even potentially life insurance in some certain circumstances can kind of work like a tax-free income source later in life.
Yeah.
So that's a little bit more complicated strategy, but we've all seen it work here pretty well.
Yep.
In the right spot.
Yep. So there are some actionable items now, but make sure you vote.
See, I'm concerned though, like down the road, Roth IRAs will be taxed. Like I think they will again change the rules of the game. I think I mentioned that in a previous episode. I think they will change eventually as they find out higher taxes actually doesn't drive higher tax revenue. Actually disincentivizes investments, disincentivizes economic growth, and tax revenue actually goes down with higher taxes. They're gonna be like, okay, well we're gonna find another way to try to get more taxes somewhere else, and they're going to cute with it, and they're going to tax our Roth IRAs and stuff. Well, maybe not next couple decades, but maybe in my lifetime.
If history plays out the way it has, that's why we always tell people, if you don't have a Roth IRA, open one and fund it. Put money in it. Get the clock started. Just have it open, right? Because typically what the government has done with any kind of changes in the past for any type of tax rules or whatever, they usually grandfather you in. If you have a Roth IRA open, blah, 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 like, yeah, and then maybe the Roth IRA, like they could change it. Like, hey, the money that, the basis that you put in, we won't tax you because it's after tax. But any of the gains, we have a special tax for that. There could happen, but they'll usually grandfather people in who have them open and funded.
It's a great idea.
They've done that in the past.
Yep.
Can they change? Can they not follow that suit? Sure, but that's why another tip: just open a Roth IRA and fund it. Just put money in it. You don't even need to invest it. Just money needs to be in the wrapper, in the account.
It's a great point. It's interesting how the rules of the game can change if you're the no longer the referee in the game. You're actually a player and the referee in the game, which is what the government has become. It's very interesting.
All right. Well, make sure you get out and vote in November. And thanks for listening this week. If you guys have any questions, comments, ideas for us, send us an email to info@swpconnect.com, and we'll talk to you soon.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.